Good morning, everybody. It's 11 o'clock, Monday morning, April 19th. I just want to give everybody a quick update on what's going on with gold, oil, and the broad markets, and also show you some new trading signals I'm going to be adding to the gold and oil guy so we can get more trades and people can take advantage of, which aren't quite so time sensitive. You can get in the day of or the next day, and they still will be very profitable in the long run. So I'm going to quickly jump through these charts and give you a visual and update of what's going on. So this chart here, you can see this is the 2-hour chart of gold. This is the gold futures chart. I run off futures because it does give the best pricing. But more or less, if you've watched the recent videos that I posted yesterday or on Friday, gold was overbought. More or less, it created this head and shoulders pattern, and then we had a breakdown. And what we're looking for now is a new entry point for us to go long gold, because I do think it has got lots of potential to the upside. And what I see going on here is, if we zoom out a few days, we can see gold had a nice run up, and then it broke down, and now it's trading right into a key support level. And we had huge volume on the sell-off, and you can see on previous sell-offs, like over here, there was large volume as well. And those are signs that it's going to take some time to more or less correct and kind of bottom. So I don't think gold's just going to rocket higher here. I think we're going to get a grind down in this area for a little bit, and we'll probably see an intraday pattern form, and it could give us a good entry point for a swing trade to buy gold for, the next rally, which could, it could last several days or weeks, depending on what gold does. And of course, we just take it one bar at a time, and I'll be updating that way. So in short, gold is pulled down. It's trading down into a support level, and what I'm kind of looking for is almost a reverse head and shoulders here. We've got a shoulder, a head, and I think we're going to form another shoulder here. And more or less, once the trend neckline is broken, we're probably going to see run back up into the middle of here, of this resistance level. So if we're lucky, we might get an entry point in the next couple days to go long gold, but we need to let things unfold, and we need to monitor the volume and see what's going on. But again, gold is trading down at a pretty solid support level, which again is just across here, and we're looking for a move higher. Okay, now if I jump over to the oil chart quickly, this is the daily chart of oil. If I zoom out a few more months, you can kind of see a pattern. Every time there's a sizable correction, there's a nice bounce. So the trend of oil is obviously up. And if you look at these breakouts, this here would be a breakout moving up, and you'll usually see a flagging pattern, and it usually tests the breakout level. So a lot of people will actually look to buy on this high here on a support, and of course then the markets drop and they get shaken out, and just as they bail and get out for a loss, the market rallies without them. And that's kind of what the market is kind of designed to do. But what I want to show you here is support is the best support. The strongest support is right through the middle of all the noise, and that's where people have bought above and below, but the average price ends up being right in the middle, and that is where the key support level is. So we're looking for pullbacks to key support levels, and that's where our low risk entry points are made. So if I just zoom into current price action, this is over the past 6 months here. But you can see oil's pretty much trading near support here. We can kind of cut right through this noise, and you can see it's trading near support. Of course, there's lots of volume that traded under here. There's a little cluster down here, and then it popped through, so there's lots of volume here, and the same with here. And then we had this bull flag form just under this resistance level, and then a breakthrough, and we had bounces off it, so we know this is a pretty key level, and now oil is back down at that support level. So I'm looking for an intraday pattern that'll form over several days, and of course I'll look for us to get into a long swing trade that could last a few weeks, and oil could move up towards the $90-$95 a barrel. But it's this whole volcano thing is throwing fuel prices off because airplanes aren't flying right now, and crude oil is there's 1.3 million barrels a day less of crude oil supposedly is what they said on CNBC. So that's having a direct effect on crude oil prices, which is why they've dropped a couple bucks in the last day or two here. So that's what we're looking at oil. Both of them, I think, gold and oil are about to start to bottom out, and we'll be looking to go long once we see the momentum start to change direction back to the upside. So that is what we're looking at for oil. Now I do want to mention I'm going to be providing more signals with the service here, and I'm going to be focusing on the SP500. I'm going to use the 3 ETFs, which is the SPY, which is the single, it just tracks directly with the SP500. And then there's also the leveraged funds, the 2 times leveraged funds. So if we have a long trade, we use the SSO, which is double leverage. So if the S&P moves up 1% in a day, this SSO fund will actually move 2%. It moves twice as much. And there's also a short fund called the SDS, and it's the opposite. You buy it when the market is about to drop, and this fund goes up as the market goes down, and it moves twice as much as the S&P also. And there's lots of volume in these. They're highly traded. They're easy to trade, and these swing trades allow us to get in the day of or the day after, and over the long run it generates great returns. So it's not something you have to be really timely. You can get it the night of and enter the next morning, and a lot of times the next morning you actually get better fills. So you can actually scale in, which I might have us do half position the day of, another half position the second day, and it'll average out actually as a better price. So I'm going to be adding these new signals. It's not going to add a lot of signals per year, but we could get 5 or 6, possibly 10 more trades that post some pretty good returns. So that's pretty exciting, and about it for now. So I'll talk to you later. Bye bye.